Anyway, let's talk with Andrew. Andrew, you're with Allworth Money Matters.
Hey, gentlemen, how you doing? Thanks for taking the call.
Thank you.
So I have a question about what to do with some after-tax money to invest. I got a promotion and a raise recently, and ended up with a surplus, and so I've got about 36 to 40,000 a year looking ahead to next year. I've maxed out all of the pre-tax stuff I can do. And I'm kind of thinking, I had it in a high yield account for a while, but realizing that interest is just kind of kicking up, and the money's great, but the taxes are great too on that. So
how old are you?
I am 49. I'm in public safety, so I could retire as early as next year, but I probably will end up staying about 5 more years.
And you'll have a pension that's going to be roughly equal to your pay now?
It's going to be a bit lower. Lost some years in the divorce, so if I go soon, I'd have to work those 5 years to make it roughly equal.
And did you buy airtime? By the way, this listener, just based on the area code, is from the state of California. And if you're a safety worker, which means you're in law enforcement or work in a prison, it is some of the richest pension benefits in the U.S. Fair statement, Scott?
Yeah. It's funny. So, and I have a good friend. I've got a couple good friends that are retired CHP. And one was complaining because his cost of living is only 2%, and what? But as he's telling me this, he says, "I know I shouldn't be complaining about this."
That's correct. So that for the rest of the listeners across the U.S. and overseas, both of you, their pensions are fat pensions. So do you have a 450?
Which is one of the reasons that people stick in the
But you have a 457 and a 401k available to you, do you not?
Yes. So I've maxed out my 457, and I've been doing the pre-retirement catch-up. That's part of why I'm going to end up with so much surplus next year, is I've been doing the pre-retirement catch-up up to the stated age of 50.
But what about the 401k?
You know,
I'm using a 401 to backdoor a Roth.
Oh, okay. No. Okay, let's.
No, he's using the 401k for a Roth.
But not, are you putting the maximum in both the 457 and the 401k?
Yes, the 401k, that maximum is quite a bit lower. But yeah, I'm doing the maximum. I also teach part.
It's not. It's not lower.
Okay.
It's
and you teach part time. How much do you earn teaching?
About $10,000 a year, and I have 100% of that going into the 403.
Okay. But I think you have room there. The 401k and the 403b fall under the same guidelines, correct, Scott? But the 457 doesn't.
That's right.
Right? So what happens is when people have a tendency to look at these, they look at the 401k, 457, 403b as the same.
And there's maximum limits
on each one.
Both on each one, but also in aggregate.
With the 403b and the 401k.
And IRAs, yeah.
But there is not an aggregate limit with the 457.
Because it's
employee deferral. It's a deferred compensation. It isn't a retirement plan.
You actually don't own the asset until you leave.
So I think you probably have a lot of room left in your 401k and your 403b.
If you wanted to do it on a Roth basis.
So can I contribute more to a 403b than I make at that employer?
No, but you can contribute.
Okay, so
but you can contribute more. What percentage of your pay is going into your 401k?
Or how much annually is a question, dollar amount?
So I have an IRA that I use to backdoor. I don't have a 401k. I was under the impression that it was either or with government workers for 457 or 401.
Nope. Easy. Yep, it is the 401k.
Okay.
And you're going to be limited on, isn't it you only have to combine with the 403b and the 401k for maximum limits? Yeah.
I believe so.
Yeah.
Don't quote me on it. Okay. So I think your limit is what, $26,000 a year? Or something?
Yeah, it's something right around there.
And it'll go up when you're age 50.
Yes.
Yeah.
Okay. So that'll take care of some. And then, do you have any money in, what do you have in savings outside of your retirement accounts?
So outside of those retirement accounts, I have about 90,000 split up between a high yield savings, a lot of ETFs, because I listen to you guys and you guys say use the ETFs. Although I don't listen to some, so I have 15% in individual stocks that I just like to play with.
That's fine.
And I have about 20% in bonds.
So I just looked it up. So the maximum limit on a 401k, and it combines with a 403b, is $23,000 for 2024.
So there's another 13,000 I can put into a 401.
Yeah.
And I'm assuming you don't have any other debt.
Mortgage.
Yeah.
At 2.9%.
Yeah. You're not gonna touch that.
Yes.
I would just continue to build up. I mean, in a perfect world, you get to retirement, you've got a nice pension, you've got money in a tax-deferred 457, you've got money in Roth assets, and you have money in just brokerage accounts, because that way it gives you the greatest amount of flexibility when it comes time to actually spending some of these dollars, right? Because there's tax consequences on just about everything.
Sure.
And so the more diversification you have in your saving strategy, the better off you're going to be
when it comes to withdrawal.
Yes.
So I would continue to do the ETFs.
Okay, so just as much as possible into those ETFs as a savings vehicle, and hope for long-term capital gains when you finally got to pay.
Yeah. And are you living the lifestyle you want, though, or do you?
I was kind of thinking the same thing.
No, I am. So I'm actually living the same lifestyle that I had about 3 years ago before I promoted. I just didn't change anything. I didn't let the increased salary creep into my life. I still travel. I'm about to go on a 2-week cruise with a girlfriend, and I'm doing the things that I want to do.
Perfect. Where are you going?
Hawaii, out of San Francisco.
Well, you're going to take a cruise all the way to Hawaii.
Yeah.
How long does that take?
Long time on the 4 days getting there, 5 days getting back, and no cell service the whole time, which is one of the biggest draws.
Oh, that sounds pretty nice.
That's funny.
Getting away from everything.
So why'd you go on a cruise? That's funny. Yep, easy, and just put the between the 403b and the 401k, go to the maximum of 23, and remember at age 50 you have the catch-up provision, which. Whatever that means.
Yeah, you get a catch up. And
beginning
next year, there's even more for what age is it? 60?
60, some. Yeah.
I think it's age 60. There's more you can contribute.
Yes.
The challenge is there's still required minimum distributions. And even though they've increased the age, they haven't adjusted the table that's used, which is based upon, crazy as it sounds, a joint life expectancy between you and somebody 10 years younger than you. That's how they came up with this crazy table. But they have not adjusted that at all.
But they did adjust what happens to the required minimum distribution at death.
Yeah. And considering that we are now no longer, our life expectancy has been shrinking the last few years, one could make the argument that they need to shorten it. But that would be a horrible thing. Okay. I'm just throwing that out there.
Okay,
anyway, glad you called, Andrew.
Thank you.